The difference between success and failure often comes down to one thing: your mindset. Trading is a battle of the mind, a test of your resilience, a psychological game, a relentless test of your patience, discipline, and mental strength. This mindset is the difference between those who succeed and those who struggle. But how do you develop a mindset that does not just navigate the markets but actually thrive in them? For me, the trick is in something I came across a long time ago, something called the 3 C's of the resilient trader. These 3 principles serve as the foundation for maintaining discipline, managing emotions, and making strategic trading decisions, which is what a strong, resilient trading mindset is all about. In this video, I'll break down the 3 C's and show you how to use them to develop a rock-solid trading mindset. It doesn't matter if you're a beginner or a seasoned trader, mastering these 3 principles could be the game changer you've been looking for. Let's get started. The first C, clarity. Seeing through the noise. Imagine standing in the heart of a bustling city at rush hour. Car horns blaring, sirens screaming, people pushing past you in every direction, and flashing billboards fighting for your attention. Every second, new distractions pop up. Traffic lights change, street vendors call out, phone screens light up with notifications. The noise is relentless, the movement overwhelming. Now, picture a seasoned city dweller navigating the same chaos. They don't flinch at the noise, they don't stop at every flashing sign, and they don't get lost in the crowd. They just walk with purpose, weaving through the streets effortlessly, eyes locked on their destination. They see through the chaos, filtering out distractions that don't serve them. That's clarity, the ability to focus on what truly matters while ignoring everything else. The trading world is just like that city, fast, unpredictable, and filled with distractions. Prices jump, headlines scream urgency, Twitter gurus make bold predictions, and indicators flash conflicting signals. The inexperienced trader gets caught up in this madness. He reacts to every price move, panicking when the market dips and chase heights when he sees others getting excited. He is constantly checking social media, looking for confirmation, and fills his charts with so many indicators that he can't even see the price action clearly. His trading decisions aren't based on strategy. They're driven by noise, fear, and impulse. But the trader with a resilient mindset moves differently. He doesn't panic when price drops unexpectedly. He doesn't chase the latest hot trade on social media. He doesn't let his emotions dictate his trades. He follows his strategy and trading plan with focus and discipline. He doesn't just see the market. He understands it without getting caught up in the noise. Distractions in trading come in many forms, and if you're not careful, it will throw you completely off course. And these are some of them. Market hype and FOMO. This pair is about to skyrocket. Buy now before it's too late. Sounds exciting, right? But headlines like this are designed to trigger impulsive, high-risk trades based on emotion, not logic. Short-term volatility. A small price dip sends you into panic mode, leading you to close trades too soon, even when the bigger trend remains strong. Overreacting to these minor moves often leads to missed opportunities. Indicator overload. Some traders clutter their charts with countless indicators, hoping to find the perfect setup. But more indicators don't mean better decisions. They often just create confusion and hesitation. Financial news and social media noise. Every day, so-called experts shout different opinions. One says bullish, another warns crash incoming. The result? You second-guess your every move, never trusting your own analysis. Distractions create doubt, and doubt destroys execution. So, how do you develop clarity for a resilient mindset? Well, it all starts with having a solid trading plan. This trading plan is your compass in the chaos. Without a plan, you're just drifting, vulnerable to every whim and whisper of the market. It is also very, very important to trust your process, even when things get shaky. Next, trade what is happening, not what you think should be happening. The market doesn't care about our opinions. It speaks in price action and data. Let that guide you, not gut feelings or fear. Also, tune out the noise. Too much news and social media chatter will just cloud your judgment. You have to learn to trust your own analysis. The second C, control. Mastering your emotions. Liam was addicted to the rush. If he wanted something, he got it. No hesitation, no second guessing. A sleek new car. Bought it on impulse. A business idea that felt exciting. He was all in before he even understood the risks. A high-stakes gamble with his savings. Why not? He lived for the thrill, convinced that success was about quick decisions and bold moves. And for a while, it worked. Some of his snap decisions paid off, reinforcing the illusion that he had a gift. When he won big. And when he lost, he didn't stop long enough to think about why. Until that investment, a brand new crypto project caught his eye, promising outrageous returns. It was hyped everywhere, forums, social media, even by so-called experts. This was it, his moment for life-changing ROI. No research, no second-guessing, just a gut feeling that screamed, "Go all in." And so, he did. Few weeks later, the project collapsed. The developers vanished, rug-pulling millions of dollars from investors, including every cent of Liam's savings. At first, he blamed bad luck, but as he sat in silence, staring at his empty bank account, a painful realization hit him. This wasn't bad luck. This was him. His emotions had been in the driver's seat all his life, pushing him into reckless decisions, and unless he changed, this cycle would repeat over and over again. Every day, we all fall into the same trap as Liam. We let our emotions dictate how we move. A stock or currency pair starts skyrocketing, and without thinking, you jump in at the peak, terrified of missing out, but just as quickly as it rose, the price crashes, almost like the market was waiting for you to buy in. After a painful loss, you don't pause to reassess. Instead, frustration takes over. You need to get your money back. Then you double your risk on a revenge trade, only to lose even more. Another trader wins big and starts believing he's untouchable. He increases his position sizes, takes reckless risks, until one bad trade wipes out weeks of gains. This is what happens when you let your emotions control you. But the traders who thrive, they move differently. They don't chase price spikes. They don't panic when a trade goes against them. They don't act on impulse. Instead, they stick to their plan with discipline and patience, because they know control is what separates long-term winners from short-term gamblers. Now, don't get me wrong. Control isn't about eliminating emotions. That's impossible. It's about not letting emotions dictate your decisions. A successful trader might feel excitement after a big win, but they don't suddenly double their risk. They might feel frustration after a loss, but they don't take reckless trades to make it back. They understand that one trade doesn't define them. Only their ability to execute with control does. But mastering this mindset isn't easy. It takes conscious effort every single day. So, how can you develop control as a trader? Let's go back to Liam's story. Liam learned the hard way that control isn't optional. It's everything. And if you want to trade successfully, you have to build the habits that reinforce it. First, stick to your plan like it is the law. A well-defined trading plan is your emotional shield. If you know your entry, exit, and risk level before placing a trade, you won't be making emotional decisions during the trade. Next, trade within your emotional tolerance. If losing a trade makes you feel sick, you're risking too much. Scale down your position size until a loss feels manageable, not devastating. Then, detach from the outcome. A win doesn't mean you're a genius, and a loss doesn't mean you're a failure. Stop letting the result of a single trade affect your confidence. Zoom out and focus on long-term consistency. And finally, step away when you feel out of control. If you feel frustration creeping in, if you're tempted to revenge trade, hesitate too much, or overanalyze, walk away. The market will still be there tomorrow. Your mindset matters more. Every trader faces moments where emotions threaten to take over. Some give in, letting greed, fear, and frustration wreck their accounts. Others take control, trading with discipline, patience, and strategy. The difference isn't luck. The difference is the mindset, the resilient mindset that says no to emotional trading. So ask yourself, are you reacting impulsively, letting emotions push you into bad trades? Or are you executing with precision, staying focused, and following your plan? Because at the end of the day, the market doesn't decide who wins, your level of control does. The third C, consistency. The power of daily effort. There's an old story about a stonecutter. Every day, he takes his hammer and swings at a massive rock. 1 strike, 2 strikes, 10, 50, but the rock doesn't crack. He keeps going. 70, 80, 90, still nothing. Then, on the 101st strike, the rock suddenly splits in half. Was it that final blow that did it? No, it was the 100 strikes before it. The silent, invisible work that made the breakthrough possible. That's consistency. Small, disciplined actions, repeated over time, that leads to massive results. Most people admire success, but few see the work behind it. They see the trader who makes 6 figures but don't see the years spent refining his strategy. They see the athlete winning championships but don't see the early morning and late night training sessions. They see the entrepreneur driving a luxury car but don't see the failed businesses and countless setbacks along the way. The world is obsessed with breakthrough moments, but real success is built on consistency, on showing up, even when nothing seems to be happening. Let me introduce you to Jason and Mark. Both started trading on the same day. Both of them have the same strategies and resources. But 1 year later, their results are completely different. Jason starts with excitement, making money in his first few trades. Confidence surges, and like most he is thinking, maybe I'm a natural. Then he hits a losing streak. He panics, abandoning his strategy. He jumps from one trading system to another, chasing the perfect setup. He trades on impulse, sometimes overtrading, other times hesitating and missing opportunities. A year later, Jason's account is drained, not just from losses, but from a lack of consistency. Mark starts with the same excitement, but he sticks to his trading plan, win or lose. When he hits a losing streak, he doesn't panic. He follows his risk management rules, keeping his losses small. He journals every trade, analyze what works and what doesn't. He doesn't let emotions dictate his trades. He knows success is about long-term execution, not short-term wins. 3 years later, Mark's account has steadily grown, not because he won every trade, but because he stayed consistent. Who, do you think, is still in the game years later? At first, I was just like Jason, impulsive and emotional in my trades. But over time, I had to step back, reevaluate, and make the necessary shifts to become a trader more like Mark. Consistency isn't just about doing the same thing over and over. It's about doing the right things, even when they don't seem to be working yet. Every successful trader, athlete, and entrepreneur has one thing in common. They didn't stop swinging the hammer. When nothing seemed to be happening, they kept going. When they hit roadblocks, they kept going. When doubt crept in, they kept going. A trader who follows his plan every day, taking small, controlled risks, will slowly but surely build wealth over time. A trader who chases big wins, constantly changing strategies, will burn out and blow up their account. A person who saves and invests a little money every month will one day have financial freedom. A person who only dreams about getting rich, but never takes action, will always be stuck. Building consistency, whether in trading or life, begins with a crystal clear vision of your goals. Every little step should move you closer to that bigger purpose. But it's important to note that consistency isn't about how you feel in the moment. It's about trusting your process and sticking to it even when emotions try to steer you off course. Real progress comes from tracking your wins and losses, figuring out what works, and tweaking your approach as you go. It's a long game, and those little setbacks are just bumps in the road. A truly resilient trader is consistent, always learning, growing, and showing up. That's the only way to move forward. Most people give up right before the big breakthrough. They quit before they see the results of their hard work. But those who make it, they keep swinging that hammer day in and day out until the rock finally cracks. So the question is, are you swinging that hammer every day? Or are you going to give up before you see the magic happen? I'm guessing you can figure out what a trader with a resilient mindset would do in this situation. The 3 C's of a resilient trading mind isn't just about trading. It's about how you handle life itself. Clarity helps you spot opportunities where most people only see obstacles. Control keeps you steady when emotions threaten to take over. And consistency turns small daily efforts into big, unstoppable progress. At the end of the day, it's not the market or your circumstances that decide your success. You do. So, are you ready to stop reacting and start taking charge of your mindset? The decision is in your hands. Our mind is our greatest asset as traders, but it is also the biggest stumbling block on the road to success. This video reveals the hidden trading psychology traps that have messed with your trading decisions in the past and made you lose money over and over again. And by watching this video, and just becoming aware of these traps, is a huge step toward beating them. And that is why I highly recommend you watch the video. Please don't forget to like, share, comment, and subscribe if you are new here. Thank you for watching.